All right, valuation, valuation, valuation. That's all we keep hearing right now. My next guest says that the market was priced for perfection, but get this, we are nowhere near, quote, soon to pop level. So let's bring in Main Street Research Chief Investment Officer James Demmert. And, Wells Fargo today said, okay, no mas. We made some money on tech. We're going to get out. It's too rich for us. The S&P is trading at 29 times. Tech is 46 times. Old school Wall Street valuation. What do you make of it?
Charles, I saw that, and, I think that's old school. First of all, that's looking backwards at earnings. We want to look at forward PEs.
Right.
When you do that, these things get cut down by 50%. And most importantly, I think investors have to recognize what are growth rates relative to the PE multiples. And that's where we say it's too soon to pop.
Yeah, and if you look at PEG ratio, price earnings to growth, to your point, these stocks are really, for the most part, cheap. Almost every one of the Mag 7. And so it's like you got to use a different metric, I think. These are exciting stocks. They're comparing them to companies that they don't move. Maybe they make money, but they don't move. They haven't grown in years. So I just think it's apples and oranges to your point. But you are saying brace for volatility.
Yeah, we are. Equities, particularly in the U.S., were priced for perfection going into, let's say, at least last week. And now you're starting to see that chop. We think
I've
you're going to see more.
got the VIX up here, by the way, as you
there
speak.
You
so this might, we're starting to bounce here since the beginning of November. We're chopping our way higher.
Yeah. I think that all the AI bubble possibly popping starts to seep into the market when multiples in the market had such a big rally. Then you had the closure of Washington. And I think there's still a big debate about whether the Fed's going to cut. And I think that's causing a little bit more concern for investors. You might see that go on here for consolidation, maybe an overall correction from here. We were once down 4%. We could go down 8%.
All right. I want to ask you, you put out some marching orders, so to speak, here recently, what you think investors should be looking to do. 30-40% international, keep buying those dips, risk management tools. Let's start with that. What's a risk management tool to use in an environment that could be more volatile? So, because I worry about getting stopped out of something and a month later saying, golly.
Yeah, stop losses are really important to use, but you got to be careful. Don't put them so close. So use stops, but put them further away than the natural volatility of each equity. That's important. Also be sector selective. Let's stay in those sectors that are healthy, that have got good earnings growth. And I think it's really important for investors, it's okay to own less stock if the market gets really weak or the economy gets really weak.
When someone says international, is there a fund that you like? I mean, is there something, because we don't know the hottest stock in Japan right now.
Yeah, at Main Street, we focus on the individual securities, and I think that's really where the opportunities are.
Just like America, but you got to know.
You got it. And there's some great balance sheet companies at really, really attractive valuations overseas, like Siemens and some others that we can talk about.
All right, real quick, Chemical, we just kind of, hit on uranium a moment ago. Siemens is a name we all know. It's a stock we should all own.
Yeah, it is. Investors in general are underinvested overseas. Siemens are part of all the indexes. It trades at 15 times earnings. Big industrial companies going to take advantage of that big earnings acceleration we see in Europe.
So, in my book that's out right now, I have an entire chapter devoted to Warren Buffett. The title is called The Original Diamond Hands. It's chapter 7 in my book. He just wrote this letter. I mean, it's his last commentary to folks. He's going to go quietly. I just want to get your thoughts on, someone in this business, what he's meant for you.
He's the Oracle of Omaha. I grew up really reading his annual reports, watching what he was doing, seeing the quality. I think that's what investors can take from the Oracle of Omaha, the quality that he brought to his stock selection.
James, thanks so much, man. I love your style. I love your thinking. You really do a great job. And